At 369 Forecast, our cutting-edge mathematical models delivered an impressive 90% success rate in 2024, empowering Wall Street traders with unparalleled precision. Trust the numbers, trade with confidence. A heartfelt thank you to all the traders and friends who believed in 369 Forecast and brought our models to life. Your unwavering support, trust, and commitment gave us the opportunity to showcase the true vibrational power of 369. Together, we've created something extraordinary. Here's to our continued success.
Welcome friends and traders. Let's apply our methodology of 369 forecasting, how we decipher the vibrations of the market. Let's do it here with 6 tools. It is very important to stick to a structured flow and a model flow. Model flow is important. It is like operational flow. So we will have our brain trained on this structural flow. First step we do this, second step we do this, third step we do this, and each step is an ocean in itself, as people who are using these tools will tell you. As you spend more time, these things start talking to you. It's a symbiotic relationship between the tool and your mind and your gut and your heart. There are 6 billion neurons in the brain, 400 million neurons in your gut, and there are 40,000 neurons in your heart. So there are 3 brains, plus your brain itself has 3 brains as well, left side, right side, and reptilian side. So if you really think about it, right, that is frequency of 5, and 5 is the frequency of S&P. So you're better off training all these brains through meditation, through repeating framework. So the process is important. If I ask you, I have given you 50 tools, so where do you start, right? That is always the key. Well, start at the beginning. In the beginning, there was Sunday. In the beginning, there was Sunday and the market opened on Sunday. So what do? We start our analysis on Sunday open. And we have been talking about Sunday open. And we put it here on Sunday. And that's all we do. And we keep it on. And the reason this was designed years and years back was when we had Friday expiration options. We wanted to see where are you going to expire. So we have, let's say we knew the market is going to expire somewhere in this range, right? We had options sitting here. Calendar spreads, we had butterflies, we had iron condors. Anyway, that is a tactical structure. But now we also talk about, we can also do this as we teach. These numbers from the Sunday have the vibrational frequency. So market is doing this, right? Usually 90% of the time it will be just contained within these levels, and then 3-4 times a year they blow these levels. Right here, below these levels. So let's evaluate. You are here and market has been going sideways. We have been talking about, we had projected move, which we have expressed in the videos earlier. Collecting contracts, when they're collecting contracts, they can go up the next leg or down the next leg. When volatility is extremely low, 13, 12, you can see the averages they are playing for the year. For market is made the highest high ever, volatility is lowest low. For it to make some room for movement further, they have to adjust the volatility. So when this goes, the volatility doubles. So it gives you room of flexibility of movement. Otherwise, everything is constrained. Volatility models are mean reverting. So you should know that, right? We cannot really say, okay, it's 13 is going to crash. No, they can go on 13 for months because that is the bullish trend at play. Once you reach a critical level, as we had projected through market maker value areas in the other videos, you can watch that. The measured move target, extreme low volatility, and they're going sideways for 2-3 weeks. Expectation is better to hedge because those hedges are cheaper with the low volatility. Volatility is a big ocean in itself, but all right. So typically you will be entertaining your thoughts like, you're in this model 369, we have which frequencies to trade based on the digital sum of these dates and years. We know where they're heading. All right. So let's analyze this day. Now we have a context. Let's run through the tools fast. So Sunday open is always the first tool you should deploy. And the reason is, I think, made pretty evident. Market comes down here. We are going to trade with this 369. Market opened. If you do it properly. All right. So on this day, 12:16, if I see the differential is 4, so 2, 4, 8 is the frequency for this day. It went to 4 and it came down. 17 and 12, if I just take the 1 out, is 19. 9 plus 1 is 10. So this is frequency of 1. So it went to 1 and took off. So you got the idea. All right. This day, 12 minus 18, 18 minus 12 absolute is 6. So 6 is what we were looking for. Market went to 6 and it stopped dead on arrival. This is 1 hour chart of ES and you will be taking long here, right? This is the model and you don't know, but when you see a huge single bar like this, it went, if you go back in time, it got rid of 3 weeks of work. It closed strongly and it got rid of all the lows and all the closes. This is the latest aggressive close. All right, so this means it has huge power. Okay, but we are going to follow the rules. We will be taking a long here and we take a loss. Then what we are saying, we are saying, okay, if this is going to go off, remember we're going to trade at the frequency. Look at these frequencies on the right? 12 and 6. This is 6, right? This is 18 minus 12 is 6. So 15 is 1 plus 5 is 6. So I am at 6 right here, natural 6. Next natural 6 is 15. It went to 15 and it stopped there. But did we know that it's gonna blow? Well, if this happens, be cautious. It means you should take a try and it will go up because we have to trade the rules, right? Same thing here. You took it here, you took it here, it was working. You took it here, it was working. Same thing, you come here. But you remember, market maker moved from the value. Top was predicted. All right. And we all talking about Santa rally is coming, Santa rally is coming. Well, here is a Santa rally right here, right? I mean, context is different. So above, so below. For the Earth, this is a crash. For reflective side of Earth, which is, they call it heavens, this is Santa rally on the other side. It's a reflection, right? Anyway, jokes apart, let's get to business. But here it is, right? So look at the frequency. So you took a loss, you don't know what's happening, and you step aside. You tried it. I said, okay, I will try again when it gets to maybe higher frequency. This is where we have so many tools for the reason. And then I'm gonna do it right in front of you. First step, Sunday. Okay. All right, so we came here, no worries. We have been talking about Sunday, keep it on Sunday. There's no reason for us not to move. When something like this happens, when it goes to the extreme, there's no reason why you cannot move this either, which we do for SPX all the time. So let's put it on the bottom. All right. Remember, we are playing with probabilities. Your job is to call the broker to enable you to get in these trades. because they are the only legal advisors for you. If you want to do it yourself, the question is, are these vibrational models giving us the right location, right? They are. What you do with that is a secondary tactical move. Either you learn how to make that move, or you learn these models and you make sure somebody can execute, or you become the analyst, right? So from the bottom, look at this on the bottom. 19 minus 12 is 7. Where it went? It went boom, 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 boom. Right here, look at this. Let's see if we can see it. Went to the yellow lines. Yellow lines, remember, is 7 window right here. 7. Went to 7 in this box, and the world is crashing and went down. This day, remember, energy doubles. So what are we doing here? 12 and 20, difference is 8. So 8, half 4, half 2, right? So 248 is already established. Okay. So where did market go from there? Right here, 2. See that? It did not close below the 2. Volatility is higher. That means you have to either increase your stop loss areas if you're trading US futures. When this is going on, they don't let you get in the options because everybody wants these options. They are way overpriced, right? So went to 2. Then it rallied from there. Big time. Big time. Look at this. 11. 11 is 1 plus 1 is 2. So these are, you have to spend time, a lot of time. You are used to using tools, right? This is a methodology. This is the laws of nature. So you have to understand a lot more things and not treat these just like tools, like millions of tools exist out there. You can even make your own tools. So here it is. So this was the 11 box. Went to 11 box. Now this is a great example to learn this way, because when this happens, most people walk away. All right, this is the great opportunity. So when the market is going down 10%, you should never lose more than $1,000, $2,000 ever, if you know what you're doing on a $100,000 account. All right, there we go. Because protection is the key as well, right? All right. So here 7, 2, and 2. Okay. So that is how Sunday plays, and now it is going back to its normal behavior. These events happen when you have an extreme blowout. It happens when it happens 3-4 times a year. This will happen. These are the extreme bullback areas. Volatility has doubled. It can go to 40, 50. We have shown that in the videos. We will discuss further, because check out the volatility metrics. All right, there we go. On this day, same thing. Now we're back to normal behavior. Now this is what? 23. This is 11. 11 is 1 plus 1 is 2. Went to 2. Boom. Right? We're back to normal. So that is the first tool you should always use in your arsenal to see the momentum. You need the flow, and you can also adjust the way I explained. All right. So let's get to the second phenomena. Let's look at what else was going on, telling us that this is the market potentially going to stop here. So what we're going to bring this, remember, you stick with the same structure. I followed these 5 steps on Sunday, and you have a mind map. You have a pattern space in your head. Over time, it will go down and become a gut feeling as well. So you have 2 brains working for you. And as you keep going on and on and on, your heart will feel it as well. So there are 3 brains. They will all get activated, and you will get into the Zen state, which people talk about, no mind thinking, because you can only get to the state once you get engaged with the universe. I think meditations really help engage these things. Based on find ways to do that, it is going to fuse the three brains effectively. All right, so let's go to Sunday Open quickly and let's wrap this up. So Mandela is again a squaring technique. Gann was looking for it for a long time. So what do? When we see a big bar like this, this is again an hourly basis. See a big bar? Second step is, where are the termination points? So from Sunday Open we had this termination point, no problem. Then we moved the Sunday here. I'm not going to talk about it. So let's move forward. Keep that in mind. This is a progressive 4-strike, 5-6 strike methodology we're going to do. All right, so there we go. From here we were saying, if this is it, where are you going? It tells you where you are going. So this, when we talk about, is when this internal bar which we are projecting is very large, these internal squares are also active. So it went down to the extreme, went to internal square, and it reflected. Now we're gonna put it again. On this bar, right? So let's put it on this bar. This bar, red, came down. Okay, let's put it on this bar on the top. So you have to get used to your time frame. This is 60 minutes. Always start from 60 minutes. Why? Because you know big cycles where they are, reflection points where they are. All right, that's very important. So this tool captured the essence of where the market is going to be. Now we have other yellow lines here. Don't worry, they are higher vibrations. This is where they are sitting for that reason. All right, so typically you will be just using it the way you use it. Like we see a big initiative bar, you put it there and you know where we are going. You go down, see this big bar. Let me zoom in, right? Context is everything right here. This is an initiative big bar, boom, it is going there. This is a white initiative bar, it is going there, right? So we know where we are going and then we refine it further. Now this is also level 2, remember. So you need to have 4 or 5 charts. Quickly click, 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 60-minute chart, move fast, and you are good to go. Once you have this 4 things already aligned, right, we are good to go. So that is the second thing I think is good to use. You know where the termination points are, where the frequency points are. Is Mandela is a beautiful thing to have, because this is using the natural squares, and it is using, now this was red and red before, I just made it red and green, it doesn't matter, and we opened some higher frequencies, all right, for higher volatility market. Now what we are doing, we are back to normal. This is the big bar, now it is vibrating the way it is supposed to vibrate. So expect this to happen 4 times a year, blowout. Now where is it going? It should go down somewhere here, right? Retest this guy. Now they are retesting, retracing this. Panic moves by the robots. Next thing we should do is always on the 3rd chart, add polarities. So these are the vibration frequency. On 60-minute you can put it to 60-60, right? And this is what we get, what we need. We have done a bunch of videos on these already. This is just closure 2024. So let's add some more data. Again, all happening, everything is happening on 60-minute chart. Remember that. And we are trying to, and now this one we already know where the levels are, right? Now this method itself is a method. Everything is just a method itself. But for being an analyst, you need to know what's going on and you follow a methodology, because we want to take 10 trades a day, 1 trade a day, 2 trades a day, that is, or maybe 50 trades a day as a scalper. That you have to define, and these tools are adaptable and adjustable. I'm showing you on a 60-minute chart. Methodology doesn't change as the time frame flips. Time is man-made slice. It is not a visible force on 3D space. It is a physical object in 5D space. So here we are. So this method says these are the levels we want to trade. Okay, perfect. We also have described we can take the slices. Remember, if this is known, if this is already known, what can we do about it? Well, we can use it. How do we use it? We need to beam something from somewhere. So these starting points and ending points, they are at the frequency of 6 because they wrap the 24-hour window. So this is a 24-hour window which is wrapping the 6 frequency from start to end. Got it? So I can use this and slice this dynamic squares. So I can use the beginning and the end, or beginning and the beginning. I can use any of those things, and I will start from red to red and or blue to blue. So if this is happening, you didn't know this is happening. So what we do is we look at the prior day's energy boxes and we project the beams upwards and downwards. Keeping in mind, I don't know which beam to use until I prove it. So if I start from here and here, red to red, beginning of this, and I project it, we got this. So, okay, what are we expecting after that? I will explain. So you see, this is how, and when market is going down like this and this, what we can do, what else can we do? We can start from beginning and beginning, red to red, this red to this red, beginning to beginning or end to end, and we're dealing with probabilities. If this is the market, it stopped here, and how much flush it can do. Now you see Sunday, Mandela, and this slice is all coming together, high probability. But you missed this, right? Because that was only visible if you are planning for it for weeks and probably a month in advance, that this is coming, and you are positioning yourself by the projected move on the top. And then when this was happening, we also send a quick text of the vibration levels. So in this next tool, this is L2 multi-square. We just have to drop it, and we are going to find a center point. You're going to find a center point where I can see I have trapped one side of this rectangle, and this is the point. And we know if this has been reflected and rejected, it's going to do the same thing on the other side, and it does. So we have covered Sunday open, how to change the philosophy, how to work it out. Then we went on to mandala, right? And then mandala is giving us the frequency and vibration. And the second part of that is we can place this mandala at the highs, lows, big bars, and then big wick bars. So you will get used to those things and finding these termination points. Third part, we talked about having the energy beams through the polarity express boxes, which are 6 by 6 on 60 minutes. 666 is 9, 60 minutes is 24, 24 by 24 you can do, and you can do 24 is 60 on a 60-minute chart. You can do 60 by 60, right? We're creating a square, and this is energy square. Next thing we're talking about right now is this square and the circles coming together, and this is We have seen this many times. Now this is just a revision of it, right? So when market was going here, you saw this big thing happening. Now you don't know this, but if you look at the square, right? 1, 2, and this is the third. Remember, let me tell you one secret as a gift. 1, 2, 3. Now in the third square, it went halfway. 1, 2, 3, halfway. So it is 2.5. 2.5 is, it went a little bit more than that if you really measure it. Say 2.6, right? 2.6, because you will say, hey, this is not half, it's here. Okay, 2.6. Okay, we can measure it as well. So it went to 2.6. Now 2.6 decimal, if you take it out, is 8, isn't it? 2 plus 6 is 8. Look at this day. 20 minus 12 is 8. It was attracted to this number inside the square. Inside this square, how much it went inside is 1, 2, and here 2.6. Because if it goes here, it is 3. Look at this. It's all the numbers. And this is one of the techniques we use when we say the market is going to be in during this 2 minute, 1 minute, 3 minute, price has to be here. 11:58 price has to be here. Here it'll give you 3 levels. We cannot share those models right now in public, but you got the idea, right? The convergence of time vibration and the price vibration gives us the pivot probabilities with 91% accuracy, right? It will tell you if the price at this time is here, you take the trade, it's going to reverse. If it is saying price should be here and this time it is not, you just walk away. That is a different phenomena, but it is all about numbers. We're just dealing with 9 numbers and 8 gaps between the numbers, nothing else. Nothing else. No differential, partial differential equations are being solved here, right? All right, there we go. So from here, you know, okay, and then from here, you have 2 things going on, and you found a balance point. Now you may be looking at different things. You may say, okay, I'm looking at based on what I have been observing. I use this box to this box. I use this box reflection to maybe, a circle. So its flexibility is there, but you got to test it out. But I'm giving you one idea. There's, again, we are dealing with laws of nature. Reflection point, I showed you one easy jump start. So there's a number from here and number from here, they converged. And look at this. 248 from Sunday, this was 2. Remember, you should be able to remember these 4 things, 5 things when you're doing this analysis, right? If you just show up at 9:30 and start pressing buttons, you're not planned, you're not prepared. We get up at 5, plan for all this probabilities, and we have it all marked, and your brain is already ready for it. So you're not reactive, you're proactive. Let's do one last one, and we can bring C54, the market maker levels, and see how they operate under all conditions. So what we are doing here is 369. Now our development team has built all these things for us. I also got a little confused initially about all the names, but I think after a while we get used to this naming conventions and what it expresses. So if I'm saying Mandela, if I'm saying Sunday Open, and you're watching this first time, these are just descriptive names telling us out of this in 24 tools you get in level 1 and level 2, which one are we. I haven't even shown you 21 tools. I highly recommend that you watch this playlist right here, the Denver Trading Collective, 24 videos. They expose all the 22 tools, whatever tools we have, level 1, level 2, right? 3 months back, same thing happened. What happened last week? We applied the same, all tools on same 2 days. What I'm going through right now. Exactly how every tool gave you, because they are naturally aligned tools. Exactly what has to happen, one probability space, what will happen, right? Everything is applied here on that single 2 day which we are going through. This blowout happens 4 times a year, which are also great pullbacks to buy. If you know and even if you understand volatility models, that is a bigger discussion and a big ocean in itself. What do you see and hear on TV about volatility, VIX, this, that, right? There's 20 hours of complex mathematical formulas we have to go through just understanding volatility. But if you're not dealing with volatility products in your trading arsenal, at least understand that when the volatility is compressed at the lower edges, is like, excitement in the market. When you reach our reflection points, measure moves from the VWAP as we have discussed. Watch that video. Right? So let's check one more thing. Where is it? If you go to this, remember, after the fact, as we said, right? Everybody's a hero. After the fact, everybody's a hero. This is NQ. Sunday open. 3. We don't have too many levels here for the volatility ranges are being expanded. That's why NQ, it is designed to give you weekly high and low only. Alright, so goes to 3, goes to 6, goes to 3, goes to 9, goes to 3, right? It's just jumping between 3, 6, 9. So we just expressed 3, 6, 9 frequency for NQ. Interesting thing which took place on that day, where it said market is potentially going to stop here and reverse. This is a market maker level which I'm about to show you right now. Q at 6 or 7. This is like 7 a.m. New York time, right? We get up at 5 and we know what we're doing after that, right? We are analyzing what I'm doing and showing you right here. Look at this. SPY is gonna go from here. And this is happening before the market opens, as you know, 7 a.m. What happens? Right here. Boom. Into market maker levels. Into market maker levels. Huge. This is the power of reflection of C54. Let's check it out. Now I applied that on Qs and SPYs, so it's controllable. I can do it on anything, because we are using the natural rhythm of the market itself, and we are projecting market maker models, not after the fact, before. People are interested in this is market maker is doing this after the fact. Hedging is going to happen here after the fact. We tell you in advance where they will come and hedge. Why will they come here? Why they come here? Who cares? Everybody has to follow the laws of nature. Rest is all great marketing gimmicks, right? No one is beyond the law and no one is beyond the nature. So C54 is our structure we want to follow. So let's go from here, and here there are 3 trend lines we talk about. So initially you were doing this. When market came here, you took a long and you took a stop loss. This is, then it came back on the other side, which is also from here number 7. This is 7 vibration from Sunday, and you got it. This is also from balance point I just showed you. This is a reflection point. This is a reflection point. So there's a lot of things telling us this is a hot zone, but coming down, this hot was not entertained. On the reflection back, it was not a problem. So from this, we said, okay, it seemed like this did not work, so let's project it from ultimate high. Now what? This broke from the ultimate high and captured it. See that? Boom. So now this from Sunday is 15th. Remember, 18 minus 12 is 15. 15 is capture. This is captured. I didn't go through the beams coming from here from the previous days, right? But this is where, when we have this 4 or 5 things coming together, 5 things you should do every day on hourly chart, which I'm just going through right now. I've been talking more than I'm really doing. It takes one click, 2 click. This is 1, 2, 3 click because we are doing projections. All right. So let's move it. Now we're gonna move it from here. And we going to do this trend line 1, 2, 3 touch, when we are going to project it from there, right? And what do we get? And what is this? This is 2. Remember, 12, 20 Sunday open. This is 2. This is 11 from Sunday open. Remember, you have to remember these things. If this is your business, got to know, run the business by numbers. So, my friends, let's conclude this. We went through methodology, and there are 21 tools from level 1 and level 2. It takes 1 year to get used to these vibrations. We go one-on-one with people who are interested, and we reveal the things behind the scenes. And you don't want to calculate 20 things when you're trading. You just want to get used to these 4 or 5 things, and you get used to 20 things for different reasons. And you will settle down if you're projecting the stocks, if you're projecting this, you're trading 5 minutes, you're trading 15 minutes, you're doing swing trading. All options are possible by level 1 and level 2 with the extreme automation. No robots here. Without robots, we deal with the universe. And wanted to wish you a great upcoming year. Thank you.